Good evening, future Mullenaires. How are you tonight? Let's talk about Mullen and the short squeeze that started today. Guys, I am very excited because I feel that this is long overdue and we finally got that breakout point. I'm very confident in where we close tonight, and I really believe that tomorrow we are going to rip through 50 cents fairly quickly. It started today, and it was very odd the way that it pulled back because I think that even day traders, if they were watching the chart, are well aware that this could easily have gotten above that 50 cents. In fact, I expect the next resistance to be at 54 cents. But anyways, things happen, and you know what? It's really good that we're consolidating and building levels. I would much rather see that than a straight rip up followed by a massive dump back down. So let's take it with strides and continue to build our positions and ride this wave up. Anyways, let's get started. Please remember to smash that like button for me, and nothing I say is financial advice. Always do your own DD. Remember that this company is not yet profitable. So like any other startup company, it is high risk involved, but that also means a potential for a high reward. Just don't over leverage yourself and don't invest money that you couldn't afford to lose if things go sour. Okay, so looking at the chart, as you can see, we have created a beautiful flag that I expect we break out of tomorrow. And we were up 24.38% today. Actually, we were up higher when we hit that, I think it was 44 or 45 cents before we pulled back down. Guys, this is exactly what I'd like to see the entire way up. So I noticed that in rankings on Webull, we are now #1. That is huge because that means there's a lot of eyes on this stock, which obviously we are #1 in volume today as well, guys. So without a doubt, there's a lot of eyes on the stock. As you can see, technically as well, we have a strong bullish signal that's indicating a short and medium term move to the upside. Guys, that could change to a long-term move as this continues to rise up. It just needs to hold, more than just a breakout. But we've had several days now, 1, 2, 3, 4, 5 solid days of green, which is very, very nice to see. And there's 8 bullish and no bearish signals at the moment. There has been some articles that came out today that I just want to draw your attention to because there's going to be a lot of FUD articles coming out. Please remember that hedge funds short this are being paid to, or they're paying journalists, in my opinion, or they own these journalist companies that are producing these articles. So please don't let them dissuade you from your investment. Obviously, you're well aware that this is a startup company and there's risks involved, but a lot of it's going to talk about dilution and the upcoming shareholder vote. Now, guys, ultimately, I think there's also a lot of bulls in the stock that would like to see it get above $1 naturally to avoid a reverse split. And I honestly believe that this is very possible. If you remember way back when, I think maybe it's been over a year ago, like a year ago, October or something, we had a move that went up to like $3 or $4 even, and then pulled all the way back down. There's no reason in my mind we can't get back up there again. Something else I saw that I wanted to point out to you was this article about the debt to equity swap that was undertaken, where Mullen amended its security purchase agreement to include convertible notes instead of preferred stock and warrants. That said, a second amendment of this agreement stipulated $90 million will be paid out to investors in the form of Series D preferred shares on January 24th and February 24th. So guys, ultimately, according to the most recent amendment, investors will be able to purchase these preferred shares at a price no higher than $1.27 with a floor of 10 cents. So I personally believe that we're going to get the stock somewhere around 127, and it may hold back from there while these shares get added in. Now, I know that they're putting out this article trying to pretend like this is a bullish thing or whatever, but it says accordingly demand for Mullen stock may increase in the coming weeks depending on the number of investors looking to take part. But you have to remember that if these notes are out, they're not giving away these free. They have to buy them, and ultimately, this is another form of dilution. So I feel like they're trying to create this article to give people a bullish undertone. And really, they're trying to dig at us because it is dilution. But this is not new dilution. This is something that has been well aware of. Now, as far as the cost to borrow fee plunging 80%, guys, we are going to talk about cost to borrow in just a minute here, but I wanted to take this opportunity to discuss something in this article that explains cost to borrow, because I think that a lot of people don't really understand it. Now, just like with supply and demand, when there's more demand for shares and lower supply, generally you see a cost to borrow rise. When there becomes less demand for shorting and more shares available, then the cost goes down. Well, we're going to talk about how many shares we have available, but I want to explain the exact details. It says a lower cost to borrow fee signifies less short seller demand for a stock, while a higher cost to borrow fee signifies greater short seller demand. When short shares are in high demand, lenders must charge a higher cost to borrow fee and vice versa. And then Ihor Dostoevsky, who, guys, is actually a great follow on Twitter, says an increase in stock borrow rates may force or cause a squeeze for some short sellers to close their positions, getting out to realize their remaining mark-to-market profits and exiting before others buy to cover drives the stock price up. So that, I believe, is a lot of what we're seeing in Mullen right now, is that the short interest became very expensive and a lot of shorts said it's not worth paying that fee anymore and decided to close out their position, which is why we're starting to see this move higher, and I think that we're going to see more as this continues. But of an interesting note, there are currently no shares available to borrow, which I'm going to show you. The short interest, according to Fintel, is 10.83%, and there's no shares left to borrow. Now, here's what I find interesting. The cost to borrow has come down to 116.87% today. The reason that I personally believe, and it actually fell to that number yesterday, the reason that I personally believe it is lower is because there's just no shares left, so they can't really put a price on something that they don't have available to lend out. Although please keep in mind that there is obviously that F3 override. It seems like whenever there's no shares, suddenly they pop up out of somewhere, right? And I'm sure that the rest of those shares were probably lent out for them to drop that price when it hit 45 cents to try to create fair. Obviously, they wanted to create a close below 40 cents as that was where the 200 moving average was, but they did not accomplish that, which was very bullish for longs. Now, guys, that 8,000% drop in short interest headline that you see floating around, let me explain that as well. The cost to borrow went up to, and I don't see it in Fintel, but it was reportedly at 800% at some point. The highest I see it was at was 742.53, and that dropped down to 116.87, or whatever they calculated the drop with their numbers at, perhaps using Ortex or a different platform, was 8,000%. It was never an 8,000% cost to borrow. That was the drop that they were saying, because that's the percentage, right? But obviously, right now, none of that matters because there's no shares available for them to borrow if they wanted to. Technically, keep in mind, they always seem to find them somehow, like that little magical F3 override. If you have no clue what I'm talking about, look on my Twitter and look up, just search my Twitter for F3 override and watch the video attached to it, because it is factual that this is what happens. Now, just real quickly, failure to delivers do not come into play right now with this stock, because as of the end of the month, 148,288 was the lowest. And as you can see, it's just been very, very low. And this is how they managed to do that, guys, because they just drive that price down by shorting it and shorting it, getting all those FTDs off their books because they're covering it as people are selling out of fear. The only way to stop this is to buy and hold, and I'm not telling you to do that. Obviously, that comes with great risk, and it depends on what kind of investor you are, right? Are you investing in this long term? Are you investing in this short term? When you buy and hold, obviously you lose the opportunity when others are selling to get more shares at a cheaper price. But then there's tax implications and other things we're not going to get into. So again, that choice is yours, but I'm telling you how they drive that price down, and the only way to stop it would be like that old ape mentality of buy and hold. And again, that is not my recommendation to anybody. I do not give advice as to what you should do in that regard. Let's just look at Ortex real quickly, because they're actually showing a short interest of 12.06%. and 60.13 million shares. And they're saying that there's also 21.28% of the float on loan. And you can pretty much assume that they're borrowing that to short, right, guys? And please keep in mind as well that short interest is only giving you an estimate of what's reported short. And a lot of funds are not required to report their short position, so it is likely much higher. We are at 100% utilization, and Ortex is showing a 61.62% cost to borrow. Again, none of that is very relevant because there are no shares at this time, supposedly. All right, guys, that's what I got for you today. I hope you found this information helpful. I do believe tomorrow we are going to break through that 50 cents. I see our next resistant level at 54 cents. Now, if people are selling and shares suddenly become available or they're magically created, I do not think this is going to be a smooth battle. I do think they're going to take any opportunity that they can if they have a large short position to try to hold this down. Personally, they've had months to cover in that 20-cent range, so I'm not sure why they haven't done so, but clearly they haven't. And, you know, your guess is as good as mine. Are they hoping for bankruptcy? I honestly don't know, because to me, the smarter move would be you're done shorting, now let's flip it long. And I think that some funds have actually done that. In fact, let me just show you the breakdown so we can keep an eye on this going forward to see if there's more institutional buying that comes in. And remember, they're not required to report their positions right away, so you could see a large change in this come next month or next quarter. Supposedly, institutions only hold 5.07%. Corporations own 5.36%, insiders own 8.58%, and others, meaning you and I, own 80.98%. So guys, you know, we are the primary shareholders of this stock, which is why they love to short it so bad, because they love stealing retail's money, right?